Happy New Year from BCR and good morning, traders. I'm Bing and welcome to today's daily market recap. Today we are going to cover gold, Aussie dollar, and the dollar yen. Let's jump right into everyone's favorite metal, gold. Gold prices rebounded about 0.59% to around $2,623 on thin trading volume on the last trading day this year. Gold prices will end this year with an impressive 27% gain, the strongest annual performance since 2010. The rebound was driven by central bank purchases, rising geopolitical tensions, and monetary easing policies implemented by major central banks. Gold prices remained subdued as investors reacted to signs of a hawkish Federal Reserve. This outlook led to a slight decline in non-yielding gold prices in the fourth quarter. However, safe haven gold may gain some support as potential tariffs and trade policies of the incoming Trump administration may trigger trade conflicts and increase risk aversion. In the last trading day of 2024, gold prices is fluctuating around $2,620 per ounce. The daily chart shows that the gold price is in a consolidation phase as the metal is trading sideways around the 9-day and 14-day moving averages, which are 2919.5 and $2612.2 respectively. The 14-day RSI is hovering below 50, latest at 47.5, reflecting a neutral sentiment. On the downside, the gold price may find immediate support near $2603, which is Tuesday's low, and $2,600, the market psychological level. This is followed by the monthly low of 2583.39 set on December 19th. Regarding its resistance, the gold price's initial targets may be set at 2640.5 at the 30-day moving average and 2639.5, which is the December 26th high respectively. A break above these levels could support the pair towards the 2656.6 dollars, representing the 50-day moving average level. Thank you. Moving on to the Aussie dollar, AUD/USD finally broke below the 0.62 mark again after China released mixed data on the National Bureau of Statistics Manufacturing Purchasing Managers Index, or the PMI, on Tuesday. As a close trading partner, any fluctuations in the Chinese economy will affect the Australian market. In December, China's official manufacturing PMI fell to 50.1 from 50.3 previously, which is lower than the market expectation of 50.3. The minutes of the recent meeting from the Reserve Bank of Australia showed that the board has become more confident about inflation since the last meeting, although the risk remains. The board stressed that monetary policies need to remain sufficiently restrictive until inflation is more certain. On Tuesday, AUD/USD hit another low of 0.6179, which is the lowest it has ever been since October 2022. The daily chart shows that there is persistent bearish bias as the pair remains in a descending channel pattern. The 14-day RSI of the technical indicator is hovering at the low 25 level, suggesting that the potential upward correction in the near term will dissipate. From the downside, 0.6120, which represents the 6th of March 2020 low, and the psychological level support level of 0.6 are in the way. On the other hand, the psychological market level of 0.62 will be the first resistance level, followed by the 0.6274, which is December 20th high. Finally, let's talk about the dollar-yen pair. USD/JPY rebounded slightly on New Year's Eve, and the yen will fall by more than 10% in 2024, marking its fourth consecutive year of weakness against the US dollar. The decline in the USD/JPY pair was attributed to the improvement in the Japanese yen as traders continue to assess market sentiment that the Bank of Japan is likely to hike interest rates in January, following the release of Tokyo's Consumer Price Index, or CPI, inflation data last week. Moreover, the USD/JPY pair faced challenges as the US dollar fell amid falling treasury yields. The US dollar index, which tracks the greenback against six major currencies, remained weak around 108 as US treasury yields fell by around 2% on Monday. The 2-year and 10-year treasury yields were 4.24% and 4.53% respectively. The last trading day of 2024 saw the USD/JPY pair trading around 157.0, maintaining bullish momentum within an ascending channel on the daily chart. The 14-day relative strength index hovered below 65 points, supporting the bullish trend. However, if the RSI crosses the 70 mark, it could indicate overbought conditions, and that could trigger a downward correction. On the upside, USD/JPY could retest the monthly high of 158.08 reached on December 26. A break above this level could pave the way for further gains, with the pair likely to target 160, which is the market psychological level, and the upper line of ascending channel near 160.3. Immediate support is located at the 14-day moving average of 156.32. The next level would point to the market psychological level of 156. That brings us to the end of today's daily market recap. Thank you all for staying to the end. I would again like to wish everyone a happy new year and hope everyone gets a great start to the 2025. I wish everyone the best in their trades and see you traders next time.